I know you like the red one, so I ordered you the best one. It's been a hell of a day, maybe let's just have fun, have fun. You always take your time, 'cause I'm the last in line, sitting here alone, staring at my phone. When you don't show up, I know I'm out of luck, back to work again. I hope to see you then. What a hell of a day, I've been trying to make it work 9 to 5. I'm just here thinking of you at the end of the day. I've been lying to myself 'cause I'm waiting at a table for two. They're telling me we're so wrong, 'cause I've been waiting for you too long. But I know there's a way, and I'm counting up the days till I find you. Only you. But my life is flashing by and I've got no clue. What a hell of a day, I've been trying to make it work 9 to 5. I'm just here thinking of you at the end of the day. I've been lying to myself 'cause I'm waiting at a table for two. What a hell of a day, why do you keep getting away? At the end of the day, you still just keep on getting away. What a hell of a day, I've been trying to make it work 9 to 5. I'm just here thinking of you at the end of the day. I've been lying to myself 'cause I'm waiting at a table for two. Table for two. I don't wanna hear what the world has to say. I don't wanna know what you've done yesterday. I just wanna leave and go for a ride. I just wanna be alone for the night. Falling, falling. I just wanna keep myself away from falling, falling. Ooh, isn't it great, fabulous? Ooh, we misbehave, ludicrous. Oh my God, why is it so fucked up? Tell me now. Isn't it great, fabulous? Yeah, yeah, I don't really talk that much, and you don't really understand why I say love of habits don't kill me this time. Love, you gotta feel it when the distance is strong and the introvert loses it all. Yeah, didn't we get lost in the space in between? There's nothing that right and we couldn't survive, but the time that we had was sunlight. Ooh, isn't it great, fabulous? Ooh, we
Welcome. We are back. We did have one stream last week, but I was like the only one in a while. So this is like the actual all right, we're back stream. And yeah, it's been crazy. If you watched my last stream from last week, I did talk about how, and at the time we were really rallying in the market. We had a few days of just solid recovery, but I was saying I think it's just going to turn into a bear flag and we're just going to sell off and make a new low. And pretty much I haven't streamed in a week and exactly that has happened. And now we're resuming. It's like, a lot has happened, but what I thought would happen has happened. So it's not like a big surprise and I can kind of just continue. Like I said, I wanted this to happen or I thought this would happen. It happened and now I'm back. So I kind of, I guess all of the market participants kind of did the work for me, made my job easier. So we have a lot to talk about. We have FOMC minutes tomorrow, I believe, CPI numbers on Thursday, bank earnings on Friday. So the next few days are huge. I think we have large cap tech earnings starting next week. And then I'm sure like mid caps and small caps will follow in the weeks after. So we're entering a period of news. We're at a make or break area in the market. The VIX is breaking out. We're at the lowest point for the S&P 500 in 2 years. This is a very unique moment in the market. We're all witnessing it together. So I'm going to be running through all of these charts, giving some updates on my thoughts on the market, my thoughts on crypto, a lot of individual stocks, other markets. Also, we are going to have a special guest in about half an hour who has been on the stream before, but this person will be going over a very interesting topic that relates to everything we talk about. I'm just going to keep it a little bit mysterious for now, but if you stick around for the next half an hour, you'll enjoy it, I'm very sure. So that's going to be cool. And yeah, let's kind of get into it. Apart from that, there was something else I wanted to say, but I forgot. So I'm sure I'll remember in a little bit. So let's get started with crypto. If you're new to the stream, hit the like button and the subscribe button. And yeah, I'm gonna start with crypto, then I'm gonna talk about other markets, then I'm gonna talk about the stock market and then individual stocks. And then after that, we'll do the segment with a special guest. So let's get started with Bitcoin, which, it looked like it was going for it. You had two very well-defined lows off this major support at 18.7K. It was trying to break above this resistance zone. All it really had to do was this, and it couldn't. So it rejected both this yellow box breakout and this white supply line, and is now selling back down towards this 18.6K support. So we'll see if Bitcoin can continue to hold above this zone. It has held since June. So for about 4 months right now, it has successfully held this zone, but you haven't really seen much upside off of this zone, unfortunately. So it's just kind of hanging around this price point, 19K for a while now. Starting to get boring. I mean, I'm sure it's been boring for a lot of you crypto traders for quite some time now, but it was like so close and it just didn't do it. And I mean, honestly, we talk about the correlation between Bitcoin and the market. It's kind of like you had those few good days in the market towards the beginning of last week, but now the market's pulling back and just kind of maybe screwed it up for Bitcoin as well. If you zoom out, everything is still the same. I feel like I've been a broken record talking about this huge bullish pattern for the last few months, but you got to remember, this pattern started developing during the COVID crash. So this pattern took like 2.5 years to be created. It's only been 4 months since it was completed. Like it could take years for this to fully play out. Even if it does play out, there's no certainty that it will. So that is Bitcoin. Ethereum is currently testing a major support. You could see these highs back from June and July are now actually being successfully, at least for right now, flipped into a support. You're in this down sloping channel. So it's just a question of, can you continue to hold this and then hopefully break out of this down sloping channel at some point? If not, then I'd say the next support would be down towards $1,000. That's a psychological level, but also these lows from that same exact month I was talking about. So that's really it for crypto. I'm not looking at many altcoins until Bitcoin and ETH kind of start becoming a little bit more clear to me. Overall, the larger picture still looks good in my opinion. You are at major retraces from your highs that you put in really at the end of last year. And now you've lost more than half of your value on both of these major cryptos, but it could take time. These things take time, but I'm sure at some point they will reverse. So let's move on to other markets. Let me do a quick roll call. What's up? AK, Poop Around It, B Johnson, Nerve, Zeke, Pizza Box, Cheddar Freeze, Danny, Keanu Trades, and Corey in the chat. Levi, what's up? All right, so let's talk about some other markets now. The US 10-year is approaching 4%. And it looked like, and this is the second time I've kind of been faked out by this, but look at this. Like, I guess just the overall macro environment is just so overwhelming. Like, you know, this is the second time. So first we had, for those of you who remember, we had this bearish pattern, which was the head and shoulders, and it broke down right over here, and it really didn't do anything. And then we had this bearish trend line breakdown right over here, which we talked about last week. It broke down and it did nothing. So you're getting breakdowns. They're just doing nothing. So, you know, this is kind of the second major bearish formation in the row that literally didn't play out. So now you're just retesting highs of this whole entire rally. If you do make a slightly higher high, then classic bearish divergence would be possible. Not confirmed as of right now, though, but this is something to definitely keep an eye on. Again, I feel like I reiterate a lot of the same points on the streams, but that's just because they are so important and this is so unique. What we're seeing right now literally has not happened in decades. So we're talking about multi-decade breakouts on multiple asset classes and then multi-year breakdowns on the stock market, really. So it's a huge inflection point for everything. Crude oil futures did break out of this falling wedge. Finally, like the first bear flag that didn't like make it dump again. You actually had the larger, these green lines, this falling wedge play out, and you broke out of it. You are pulling back a little bit now, but I do like how you're back above 85. That's these highs from November of 2021. That looks good to me. You know, maybe you just pull back a little bit, back test, and then end up going higher, but you do have to watch out for this almost $100 area because of these previous highs in the 200-day moving average. So that is crude oil futures. Let's look at energy really quickly. Looks like XLE is just retesting this zone around 79. There's obviously a lot going on around the world with energy right now, but kind of in the same area since August. You know, you've had some ups and downs, but nothing really is changing like how it was, you know, back a few months ago. Really quickly, metals, gold rejected a breakout of this down sloping channel. Now it's kind of still in it. That's really the only update. Silver broke out, played out, ran up to resistance. Now it's pulling back. You know, this actually could be a bear flag developing now. Something like that. Or a broadening wedge. So you're kind of just in that pattern for now. Nothing too crazy for those two. The dollar currency, however, has gotten a huge bounce off this demand line. Yet again, it has hit in bullish divergence. This implies a continuation of the uptrend we've been seeing for a while now. Even looked like it had just broken this demand line over here. And then look, on the same exact candle you broke it, you got this hammer candle and you're trying to like hang on to this demand line now. So there's obviously a lot more going on here than just technicals. That's probably the easiest way to put it. So those are your other markets. Let's move over to stocks now. Let me skip this song. All right, let me give my thoughts on where we are, which I have a lot of thoughts for sure. All right, so if you watched last week's stream, basically I was talking about this. On my last stream, we were like up over here, and I was saying I think this is just going to turn into a bear flag. I think we're just going to break down and make new lows, and that's what we've done. But we are still kind of testing the same lows for the market, and now this is a huge area. So if we really zoom out here, you can see this yellow zone between like 360 to 365. We have these highs from the end of 2020. We have this low from June of this year. We have the lows from like 2 Fridays ago, and then we have the lows like, you know, from yesterday and today. So this area is kind of like your final major support, I would say, and this is kind of my own terminology that I'm using, but I would call this the final support of like the bull market. And I know that sounds weird, but realistically, you break this support and your next level horizontally is your pre-COVID crash high. So we break this support and we go down to the next support, and you would be officially back at where you were before the COVID crash. So the bull market that took place after the COVID crash, which I feel like you could argue started over here. Yes, you had this recovery over here, but that was more of a recovery than like a bull market. You were just recovering your crash. I know technically you could say it started here, but I'm just saying from the point of where you were above your pre-COVID crash levels, you would be back down to that level if we were to break the support and go to the next one. So if you want to look at pretty much this area as your bull market. This is like your final support level of said bull market. You break it, and then you're back down to where you were during the COVID crash 2.5 years ago. So that's how big of a level this is. There are, some other things going on apart from that. First, we could look at volume. And I just had a nice call with Champ Circle, and we were talking about I brought up how this has kind of been the volume formation this whole entire year on the market. So high volume has indicated your lows of the year. So if we take a look at really any of the lows, okay, high volume, low. And you could just do the same exact thing for pretty much all of the lows this year, right? It is very, very clear. That's pretty much been what you've been getting. And you even had this happen on that Friday, like 2 weeks ago, and then we had that bounce early last week. And then the opposite, low volume, has been your highs. So you see this high over here. You could see the volume during that high was very low. So volume has been a very key signal to predict literally what's going to happen next in the market. However, you've also had continuation phases. You had two different major ones recently. You had this uptrend continuation over here. And you can see during that period, when you were just doing the same thing, you just went sideways on volume. And then you had this downtrend continuation over here. And you can see during that period, for the most part, apart from that one spike from this Friday, like right over here, you were going sideways on volume. So putting all this together, all right, when you have high volume, it signals bottoms. When you have low volume, it signals tops. And when you just have kind of sideways volume, it just means whatever you're currently doing, you're going to keep doing. So we kind of still have sideways volume and we're selling off, which implies, based on the volume trends from this year, and of course, it's not going to be the same thing forever. It can change over time. It implies more continuation to the downside, in my opinion. So I do think we end up breaking the support, heading lower, and maybe backtesting that pre-COVID crash high as a support level, and then we'll take it from there. There's no point in me trying to predict what happens after that point. But it just feels to me, that, maybe you get a slight rally because this is kind of like a potential double bottom. But even if you do, again, I just don't see the strength in the market for this to be anything of like a major low. And this is now the second time they've fallen under this zone in like 2 weeks. So that's one of the major things that I'm looking at for the market. We also have two other things I wrote down that I wanted to bring up. Okay, first, and this is kind of like the bullish contradiction to everything I'm talking about, is this. And you might have noticed that I used to have like this triangle pattern on my SPY chart. I kind of redrew it to this pattern. All of this is one huge descending broadening wedge, this whole entire bear market that we've been in. It's one huge descending broadening wedge. I'm sure there's probably been other people who have spotted this before I have. Now, here's the interesting part. And the issue is we haven't done it yet, but we start rallying at any point and we get back to the supply line. What does that give you? A partial decline. Because we have not revisited the demand line. It'll be down over here. We have not revisited that demand line yet. So if we were to go, and again, if you don't know what the supply and demand lines are, and that's like a confusing term for you, go to the Discord and go to the quick education channel. There's a little graphic I have made in that about supply lines and demand lines. But basically, you're in this massive broadening wedge, descending broadening wedge, which is a bullish pattern. However, you're not even close to breaking out of it. I'm just saying this is something to keep an eye on for the next couple of months. You're not breaking out of this anytime soon. You would need like a 15% move to break out of it from here. You're not breaking out of it. You're not breaking out of it this month, most likely, for sure. Well, I can't say for sure, but most likely you're not going to break out of it this month. But it's something to start charting, and to keep an eye on. And just the fact that if we do get to that supply line first, you could get a partial decline. That would give you a 70% chance of a breakout. That's the type of move that could break us out of this downtrend we've been in this whole entire year. But again, this is just a very early development of this massive pattern. But it is now, you have 3 touches on your supply line, like 4 on your demand line. It's a full-on pattern now. You're just not close to breaking out yet. And then the other, I wouldn't say issue, but the other bearish thing happening right now is a bat action magnet move. I warned about this when we had Zeke on the stream that was titled the the bigger short. It was like a thumbnail of like the big short, but like we replaced it with me, and I put like a few other people names from the Discord in it. But if you watch that stream, which was kind of like the perfect warning about all of this, so we did that stream like somewhere over here. We were talking about how bearish things looked, and obviously we've been selling off since then. If you watch that stream, we talked about this potential bullish bat, and again, I still don't even think that this is going to fully play out. I don't see us going down to 250 in this stretch of this bear market. I think, you know, well before that you would eventually reverse, but I'm not worried about that. I'm worried about this, that action magnet move, which is basically you are now breaking, and you already have broken the B point of this bullish harmonic, but that's a bearish thing. So you've broken the B point of this potential bullish harmonic, which means that there is a decent probability that you head down lower, eventually potentially to the, I know that rhymed, eventually potentially to the pattern completion zone, but I'm not worried about that for right now. I'm just worried about the fact that you broke the B point. And even if you take away all the harmonics and everything, you can clearly see we have made a well-defined lower low in the market. This is bear trend stuff. If you just want to talk about trend analysis, you're making lower highs consistently. And now this is the big thing. You have made a very clear lower low on the daily. So that's just, again, you just add to the list of bearish things going on right now. To break this trend, you would need to, at some point, make a higher high. You would need to break above your previous swing high, which you are not even close to for right now. Instead of breaking above your previous swing high, you're breaking under your previous swing low. So yeah, the trend analysis is not looking great. You have hidden bearish divergence playing out. Eventually this could turn into classic bullish divergence. But if you combine all the things I just talked about, I think, you know, this just kind of lines together that there could be more downside. And eventually we'll be looking for that partial decline in the market. But you really can't think too much about it until we get to this point, until we do something like that. So until we do something like that, until we break above our previous swing highs, and you could even make a new swing high like this and then go lower and then break above it like over here. But until we start getting those types of formations, you're in a bear market. So bearish patterns can outperform, bullish patterns can underperform. This is kind of the same thing we've been talking about all year, but I just wanted to kind of reiterate some points in depth. And then on the flip side, we have the VIX breaking out of this symmetrical triangle. I mean, if you just look at this whole entire, really since the COVID crash, it's just been like one major rounding bottom, and you're kind of getting towards a potential breakout point. And look at this huge resistance like in the upper 30 zone on the VIX. You're now entering that mid 30 zone on the VIX. If you get, you know, 4, 5, 6 points higher, then you're testing a breakout of this huge zone. I mean, it even dates back to this spike in 2018. You get above this, I mean, just look at this whole entire, I'm going to draw like squiggly lines. Look at this whole entire area, there's nothing there. You get up to these areas historically and you go straight up in the VIX, which means you're going straight down in the market. So while the SPY is testing this kind of final like support area, the VIX is testing a breakout, obviously, of this final resistance area, because they're going to be inversing each other. So it's just such a big make or break area. And again, what do we have that could either help or hurt the bulls? FOMC minutes tomorrow, CPI Thursday, bank earnings, which is huge, especially for this one on Friday, and then large cap tech next week and the weeks after. So all of the catalysts and technicals are aligning at the same exact time. If we head over to the weekly, you've kind of already broken out of this pattern that Zeke talked about. And you even back tested it kind of in the last couple of weeks, like we extend this a little bit like that. You broke out and you back tested the breakout. And this is something I think I talked about in my last stream, that we already broke out, but we might just be back testing it. So again, like, I don't like creating fear. There's no reason to be scared if you know how to manage your risk. And also if you understand this could be a major generational wealth opportunity. But again, if there is a time for both the technicals and the fundamentals to align, and for us to see a continuation of this bear market, the variables are there. I just don't see anything that stands out to me like we're bottoming right now. So that's overall my market analysis. And that's just the more like longer term stuff. If we go short term, which I really haven't too much on the stream, and I obviously like to, you have some stuff going on. That 4-hour bearish engulfing candle is not nice. But if we go to lower time frames, the 1 hour, you know, there's still potential that you hold this little support area. You've kind of gotten a few bounces off of that. If we go back up to the 4 hour, you are getting a little bit of classic bullish divergence on the RSI. You're making a lower low on price with higher lows on your relative strength index. So there are some variables there, you know, short term. Let's check the Bollinger Bands too. You're close to your lower Bollinger Bands. So shorter term, there is some stuff. But again, even if we do bounce, I just think you eventually end up breaking these lows because it just doesn't look like you're showing like hammer candles or good volume to be like regarding this as a true support really. So that's the SPY and the VIX. You know, the Qs look pretty similar. They're already well below those lows. Like the SPY you can see is kind of hanging around this low from September 30th. Qs are well below that. They're you know, getting down to really the middle of nowhere. If we go over to the weekly, there's like nothing here pretty much. You know, you're close to your 618 retrace from the COVID crash low, your all-time high. That is something. Potential classic bullish divergence. The variables are appearing, but they're not confirmed by any means. So that's really where you're at. The Russell held up today with the Qs down 1%. The Russell was actually slightly green today. And you can see the Qs have already kind of done this. So tech has already done this. Small caps are actually above the lows from the end of last month. So very slightly, you are getting some relative strength in small caps right now. I mean, we had CLOV up 6% today, which we'll talk about in a little bit. And this is something, again, I talked about on my last stream, all right, where the SPY is only up over here. If we look at something like the ARKK ETF, it's all the way down over here. And in comparison, like the SPY is like there, like here. Small caps, mid caps, a lot of them have already done this. I don't know. We will see. You know, speaking about the ARKK ETF, we got onto the daily. You're retesting lows of the year. It's kind of like the third time. Again, I just do this. You know, if you watch the last stream, this was not like a direct prediction. It was just something I was debating. But you're still around this huge support, which is 35. It was your low from 2018. It was your low from the COVID crash. It was your low from May. It was your low from June. The ARKK ETF is testing the major level, so keep an eye on that as well. Again, it's just all one huge make or break area. That's why, you know, I'm sure a lot of you have seen I haven't put out swings outside premium in a very long time. So the longest amount of time I've gone without putting out swings. We're just in such a crazy environment that I just don't feel like that's really like the main thing. Like, it's just patience. I think patience is more important than trading right now, in my opinion, which is something I'm not used to be honest, because, you know, since I started trading, it's mainly just been a good trading environment up until the last few months. I think this is more of like just waiting for the right opportunity. At the same time, understanding that all this is technically already an opportunity for those who are cost averaging in long-term outlooks. Like, you're already getting offered amazing dips on a lot of stocks. I can't name names, but you can figure that out for yourself if you choose to. And that's that. So I really think if you can really change your perspective, you can look at all of this in a very new way. I know a lot of your portfolios are hurting, those of you with the retirement accounts, but its perspective is very important, especially when you're selling off like this. It's very important to have a healthy perspective, even though the market's not healthy. All right, so that's the overall market. In just a few minutes now, we're going to be having a special guest to join in. That's going to be kind of the remainder of the stream. Really quickly, I want to look through some individual names. We'll start off with CLOV. Make sure to hit the like button if you didn't already. CLOV is in this wedge pattern, had a bullish engulfing candle today. MACD is waning towards green. We talked about this, I think, on the last stream, the potential for that Wyckoff accumulation. And if this is going to be the spring of Wyckoff accumulation, then you better hope that this wedge and MACD crossover and bullish engulfing candle and kind of second bounce off like the 150-ish level help you get back above $2. So really, in terms of CLOV right now, from a technical standpoint, you're hoping that these variables get you back above 2 and then you hold above 2. However, even if these variables start to play out and you don't hold 2, that's an issue, because then you're rejecting a previous support as a resistance. So very, very big test for CLOV right now. Even on the 4-hour, you can see it's testing this breakout, but there's still a lot of more work that needs to be done. It's a good start, nice day today, but obviously this is nothing compared to how much it sold off in the past 2 months after earnings and the 200-day moving average test. So that's a quick CLOV update. Good volume today as well. Highest volume in about 3-4 days. You're at the lower Bollinger Band. I mean, you really haven't gotten a move. You've been at the lower Bollinger Band since the end of August. You really haven't gotten a move off this in a long time. We'll see what happens. Earnings are a while. They're in about a month. So, you know, maybe a little pre-earnings move up. That you did actually get that heading up to your last earnings. You had a nice move or about the month leading up to earnings. So if that were to happen again, there's no, you can't really call this like completed Wyckoff accumulation. It's only potential Wyckoff accumulation. But if you get the pre-earnings run, you get the breakout, and you do this, that would be a very interesting setup. And honestly, it's very similar to about a year ago, but it was the August earnings when we had the Wyckoff accumulation, and that did lead to a 50% move in 20 days. It was right over here. It was this move right there. All right, so that's CLOV. Fisker, again, beaten down. It's still in this massive wedge, but you know, it could keep wedging down further if it wanted to, or if the market participants wanted it to. You have potential triple classic bullish divergence. However, you're just kind of nowhere. And this was kind of the issue when you broke the $8 support. There's no support looking left under it. So, you know, new all-time lows today. It's in a massive wedge, but for right now, it needs to develop or find some sort of support. As much as I love the company, it's just the technical truth. There's no support where it's currently at. So it needs to kind of start developing some support naturally. Maybe Catalyst could help. Who knows when one comes. But if you do get that and you get a nice support, you have that wedge. It's still there. You're still in it. And you also sell the potential for classic bullish divergence on the daily, on the weekly. I'm sure you're at the lower Bollinger Bands. You're oversold on the RSI. For really, you know, let's see. For only the third time this year. This is only the third time this year you're oversold on the RSI. The last two times Fisker was oversold this year was over here and over here. So this is now the third time that it's oversold. See what happens. But so that's Fisker and CLOV. We might look at some other names later. I just wanted to cover those really quickly. Now we have a special guest joining. This is going to be a very interesting segment. For those of you who are in the Discord and who have watched the streams in the past month, we had a stream with him recently, maybe two actually. We are going to be bringing on Levi right now. And Darwin in the chat saying Fisker 28% short. Probably everyone. Yeah, it's, you know, but that's the thing. A lot of stocks are getting pretty highly short right now. Zeke also just shared, what's it called? I don't know if I can bring it up on it. Let me see if I can bring this up just before we hop in this call. Take a look at this that Zeke shared from Game of Trades on Twitter. Oh, it actually was from Ivy Technicals on Twitter. This is very interesting. Look at this chart. This is the amount of hedging done by institutional traders. This is 2022. This is 2008. This was the amount in 2008. This is put premiums. Never ever, I mean, we can't see before 2000, but this is insane. And that's the thing that, like, I talk about all these bearish technicals because there are all these bearish technicals. There are all these bearish macro things going on, which you're about to hear a lot more about. It's just so weird that, like, it just feels so obviously bearish, and not everybody, but like a large percent of the people I'm hearing their opinions and everything, they're bearish. It's like, that's what kind of worries me, actually, the fact that like so many people are bearish at the same time, so many people are hedging at the same time. It's like, typically it's when everyone expects something to happen, that's when the opposite thing happens. So that's the only thing that's still like in the back of my mind, like, is it too obvious? But then you look at something like this, and then you think, yeah, maybe it is too obvious for a reason. So it's just really confusing. And what might help us understand all of this on a deeper level? Well, stay tuned and let me hop into this call and let's talk about this. All right, so let me turn off the music, or should I put it down? I'm just gonna put it down like quite a bit. Maybe a little bit more, actually. All right, let me know in the chat if like the music's loud when Levi starts talking, but let's try this out.
All right, can you hear me?
Yeah, talk again. Just say like, what's up?
Hold on. I can't hear you.
Can you hear me now?
Okay, let's try this.
Hello? Can you hear me now?
I can hear you in YouTube, but I'm echoing. I don't know.
You can't hear me like off of YouTube? It says I'm talking on Discord. I think it's like your speaker. You can't hear me like off of YouTube? It says I'm talking on Discord. I think it's like your speaker.
Hold on. No, I can't. Say something in Discord, maybe.
Can you hear me now?
Or I can join Community Voice. I know that worked last time.
All right. Sorry for technical difficulties. I just want to make sure the audio is all good. Hey, can you hear me now?
I think I can hear you now.
What do you mean you think? Like, can you hear me or no?
I don't know why I cannot hear you.
No?
Okay, that's weird. I can work with echo. That's fine.
All right. So, I mean, you're going to be primarily talking. Hopefully, you can somewhat hear what I'm saying right now. But everybody, this is Levi. He's been on the stream before. He has spent a lot of time alongside C.
Hold on.
Can you keep going? He spent a lot of time working on this paper. It is opinionated. It's not financial advice. He's going to explain everything. But basically, it's a whole entire breakdown of a lot of the things that are going on from a macro standpoint in the market, from the Fed to all these global events, to just recessions in general. There's gonna be some technicals at the end. There's a lot of stuff in here, and this is honestly stuff I'm not the best at providing to all of you. So it's really good that we have so many people in the free trading movement, the FTM, that can provide this, such as Levi, just to give like a completely fresh perspective and so much more. So hopefully you can somewhat hear what I just said, Levi. I'm gonna kind of just let you talk mainly because you can't really hear me. But if you can somewhat hear this, you can just start going whenever, and I'll let you kind of run with it. He's not even in this channel. Let's see.
Test.
Talk?
Yep, I gotcha. Perfect.
You can hear me now?
Yeah, I can hear you. Perfect.
All right, great. All right, yeah, I just gave you like an introduction, like, and everything already, so everybody has an idea of what's going on. Do you see my screen? I'm sharing it with you. In like the channel.
In the channel. Yeah, I gotcha.
All right, so yeah, I'm gonna just share my screen, and like you can you read it through like how you're seeing it right now?
Yeah, I can see it.
All right,
Perfect.
So I'm just gonna kind of try and like go through the paper like at your pace, but like if like I'm not really fully paying attention, I'm looking at the chat, just like ask me to switch to the next page. All right.
Yeah, sure, this will work.
All right, cool. So give everybody like an introduction on why you decided to do this and just overall what they're about to be hearing about.
Yeah, so what got me interested in this, honestly, is what Zeke did. So he did the TA side, and he pointed out a couple macro factors that were, in my opinion, worth looking at a little bit deeper. So that's kind of what I did. I took the macro side of things, tried to break it down in a way that's understandable. If you've never taken an econ class or something, I think I did that, but then again, it's only 35 pages, so I'm missing stuff.
All right.
And then obviously I'm a BA. I'm not a PhD or anything like that. I'm not a financial advisor, so that out of the way.
All right. So the disclaimers and everything, and yeah. So you want to just get started with it? Also,
yeah, sure.
If anybody has questions in the chat, I'm going to be looking at the chat for Levi, and I can ask him any questions you have, because he's going to be saying a lot. It should probably take 15, 20 minutes. Just we'll talk about like the main parts and everything. But yeah, I'll leave you to it. Go ahead.
Yeah, sure. So if we can go to the next page. I mean, obviously, that's disclaimers. Some of the stuff is political, but I don't really feel like I need to talk about that tonight. You can read it if you want to. It might sound one-sided, but that's only because one side currently holds power. It's not an attack against them. It's just there's some people pulling the levers of power right now, and you know, one group's not, one group is. That's the nature of the beast. So what you can see on the left-hand side of your screen, that's the breakdown. That's the section titles, whatever. If you want to, you can Command 5 or I think it's Control 5 on Windows and search through it and get to a certain section if you want to.
Perfect.
Yeah. So also on the right side, that gives you a quick breakdown of why I'm doing the paper, a little bit more detailed than what I've just said. A lot of index funds, passively invested people, whatever you want to call them, your retirement accounts, Roth IRA, if you don't control it yourself, whatever it may be, mutual funds even, you don't control that, and those people might not necessarily be looking out for your best interest. They're looking for transactions, they're looking for volume and how much money they can make off of your money, not necessarily how much they can save you or make you. And then we look at something like 2008, retirement accounts blew up, pensions blew up because so many people were invested in mortgage-backed securities. I don't know that connection's still here today. It's not a mortgage-backed security issue, but there are macro factors that point to a bigger issue, and some of that's the debt spiral, some of it's something totally different. If you can go to the next page. So
Skip 2.
Section 2.
Go ahead.
Yeah, Section 2 is just definitions. You
Yeah.
see 2 definitions for recession, just because I'm sure you've heard it in the news from Fed, FOMC, whoever it may have been. We're not technically in a recession because the labor market's so strong. It depends on what definition you follow.
But you have had the 2 consecutive quarters of GDP declining, correct?
Yeah, that's been the textbook definition.
Yep.
And that's been challenged. And I still think Jerome Powell was right when he said that the labor market's a little bit too hot to consider it a full-blown recession.
Yeah, and you did go on to talk about like unemployment rates and all that. Probably get to shortly.
Yeah.
So yeah, there's just, we're gonna share. I'm gonna share this probably on Twitter a little bit later, but there's some definitions here. We just talked about that unemployment rate, labor force participation rate. So you can read these like while he's talking if you want to. But how does this kind of play into everything right now?
So right now what we see is I have this in here. I don't know if you can get to the LFPR graph. Hold on, let me see. I'll give you a page number. Yeah, if you can go to page 19.
Yep.
So I'm skipping around a little bit, but there's a method to the madness. What you can see on that right-hand side of your screen, that's the labor force participation rate. What you'll notice is, yeah, it steadily declines, but look on the left-hand side, the percentage points are not that big. I mean, you're looking at 1% changing dramatically. Like, look at the COVID crash, right? We dropped 2% and it looks like we fell off the edge of a cliff. Kind of did in terms of LFPR.
Yeah.
So why have so many people left the labor force market and decided to stay out? I don't know. We still haven't recovered to pre-pandemic levels. I think that's an issue, especially when you're trying to drive unemployment up a little bit. The employment numbers are going to be a little bit stickier because there's less people that are... It's hard to explain this. There's less people actively in the labor market, and the ones that are in are, they're surviving. They're working to survive, whatever it may be. But
So
they don't have that loose attachment.
to simplify this for, let's say, people my age, a lot of people stopped working when the COVID crash happened, and they're still not going back to work for whatever reason. And that's something that you're kind of noticing, or not noticing, but that's something that's evident and an issue.
Yeah, absolutely. And it's an issue particularly because what we're wanting to see through contractionary policy. So contractionary policy, just a brief, like a quick little word about that. It's just the Fed trying to bring inflation under control, and they're trying to cool the economy off. And I mean, that's their job, to keep unemployment at about 4%. That's the ideal percent for the US, and to keep the inflation rate at about 2%. That's their goal. It's hard, and to get inflation to cool off, you need the unemployment numbers to go back up. Because we're still below trend in unemployment numbers. We're at 3.4, 3.5% right now. I think to get inflation to cool off, you need to see that around 5 to 6%, at least for a short period of time. And that's probably going to scare the living daylights out of people.
Yeah.
So the section you're on right now is just a brief like background of the Fed, kind of talking a little bit about what I did. Contractionary policy, if you look on page 11, kind of go over that a little bit, just helping slow the flow of money throughout the economy. The higher the federal funds rate is, the less banks are going to be willing to lend out cash. And ultimately, that's going to slow down your money multiplier, which I discuss in there.
Yeah.
Some of this stuff I can't explain on stream because it would take too much time.
Yeah. But again, just to like simplify it for some people, 2 questions. First question, which you could just answer in a couple sentences. What is the reason that the Fed was created? What's the role of the Fed?
So the role of the Fed, you hear the dual mandate. It's, let's see, they supposed to promote the maximum employment numbers and keep stable prices.
Yes.
And they're not necessarily doing that for, say, the next 6 months. They're doing that for the next 10 years.
Yeah.
So
and
they have a very long-term outlook.
And the second question is, what are the 2 different ways in which the Fed goes about, changing their direction, whether it's hawkish or dovish, based on how the economy is looking? What do those terms mean? I know I'm just asking, for people who don't.
What do you mean? Like, do you mean what are their 2 ideal, like contractionary policy versus expansionary policy? Something like that?
What is the purpose of them, changing interest rates and moving their balance sheets and all of that? What are they attempting to do with that? And like, how do they do that for people who wouldn't know?
Yeah. So if we have a period of high inflation, we want to see that number cool off. So what the Fed will do is the way that money moves throughout the economy, and I break this down in there at some point, if you look at the M2. So the Fed wants to slow down the velocity of money, how fast it's moving through the economy, and the money multiplier. So the money multiplier basically says, if I have $100 and I deposit that in my bank's not really going to keep that $100 for myself. They're going to loan it out to, let's say, 3 or 4 different people, and they might loan out more than $100. Shocker, whatever. That's just what they do. Actually, that's not entirely true. It's a little bit complicated, and I think Clovis kind of knows what I'm talking about here. Trying to think of how I can explain this in like the basic layman's terms. So I know at some point I speak a little bit about money multiplier. I'm trying to find this. Yeah, so on page 12, actually. Okay.
Yeah.
So the money supply is what they're wanting to not necessarily reduce, but at least slow the expansion of it. It's part of how you get inflation. So your money multiplier basically says for every $100 of physical cash, there might be $110 of real cash. I give the actual rate of money multiplier right now, which is 1.197. They can calculate exactly how large the money supply is based off the money multiplier and the monetary base. They're controlled indirectly and directly by the Fed. If you want to slow inflation down, you decrease the money supply. If you want to ramp inflation up, say there's a period of deflation, or what you need to see after the COVID crash is quantitative easing, where they're going to ramp it up to try to stimulate the economy. That's your stimulus checks, all of that stuff. So that's when they'll buy bonds, dump money into the public markets, give Jay Powell back his printer. I mean, that.
So again, for all of you who see all of these FOMC meetings and minutes, these are all the things that they're talking about, and these are things that in the short term when they make announcements, let's say regarding interest rates, or Powell's having a press conference and somebody asks him a question on what he thinks about inflation, or I think you mentioned here what he said about real estate recently. When you hear all this stuff, it affects the market short term. Sure, you get like those flash candles at 2 p.m. Eastern time on the FOMC minutes day or whatever. But these are all things that are playing out over years and years and that are making long-term drastic effects in our economy. So Levi's put together a lot of these, and you have your opinions on how they've controlled everything, and your predictions for what they're going to continue to do. But let me let you continue with what you were saying.
Yeah, and as far as that, I don't know how many of you heard it, but Jerome Powell did say that we need to see a correction in the housing market. That's part of what Champ was referencing there. And I kind of go over the prices of housing in the last 20, 30 years. That's been a dramatic increase, and it's one of those things where it looks like it's almost going near parabolic. Yeah, if you can find it. Yeah, so that right-hand side, that shows you the price of houses over the past, how far does that go back? 2007,
yeah.
So right before the subprime crash. Right.
So for those of you who cannot see it, in 2007, the new home median sale price was $243K. As of this year, it's $437K.
Yeah.
And you go on to talk about, like this kind of bubble or that's being created. I think there's one chart that I really liked. I feel like it was a Fred chart. Let's see. Yeah, these ones. Go ahead.
Okay, so where are we?
This is
17.
Yes. Median sale price of houses. And you can just see how crazy this has inclined in the past, especially 2 years.
Yeah. And that's the thing to note too. Like the gray bar you see on a Fred chart, that typically indicates a recession. So you see that real quick blurb from the COVID crash. And then housing prices dip just a little bit before shooting at all-time highs. And it seems like there's been next to no cool off. I don't know if it can continue to rise. I don't think it does. I think any TA you run would probably say, hey, wait a second, we're into like completely uncharted territory. We should expect some sort of cool off. I mean, does it respond kind of like a VIX chart? No, because inflation obviously is going to raise the price of asset classes across the board. But I do think you see some sort of cool off. And then if you look down at the 2008, it wasn't near as parabolic. I mean, it did rise pretty quick in 2004 through 2006, but it was much more gradual. And then you finally get the cool off in 2008 with that recession.
Yeah, so you can see all these highs and lows and just this consistent move up until 09, I'd say. Or no, that's 08, 07. And then you look over here, post 2020, there's no consistent rise, higher lows, higher. It's just straight up. It's just boom. And the level of incline is also insane.
Yeah. It's honestly, it's one of those things where it's like everybody's watching it, and you've said this before you brought me on. Everybody's expecting the market to tank, and that does give me pause. It's like, is this so obvious that it's not going to happen? Or is it the circular logic issue where it's so obvious that everybody's like, whoa, well, that's probably going to happen, so it doesn't? It's an odd state to be in.
Like, I don't talk to that many people about real estate, but everybody who I've talked about real estate that's doing real estate, I don't think there's one person that feels that that house prices are going to continue to rise the way they have in the past couple of years. Like, I just don't think that people even accept, like most people don't even accept that as like a possibility. So yeah, like, we're talking about all this stuff, but it is interesting, like just how much is aligning at the same time. Like, and I know you're talking about a lot of it right now. It's like psychology behind this is really, it just makes you double think everything, to be honest. But yeah, keep going.
I saw Clovis pointed this out. He said demographics was trending towards a decreasing labor force, and COVID mainly exacerbated the trend. Yeah, I kind of think you're right.
Yeah, also the timing of everything, like the bear markets being like once a decade, pretty much. Like we were kind of due for one, and then COVID kind of happens. Like, the timing was also kind of just. Yeah. I don't want to say the word I was going to say, but like, it's just, let's just say it's coincidental. Like, that the two happened at the same time, when historically we were already kind of due for something like this. But now we actually have like some crazy things going on in the world that are making this a little bit more exaggerated than what we would normally be talking about as a cyclical bear market, right?
And to that point, if you go to page 20, the bottom of page 20, that chart on page 21, that I think gives me the most pause. What we can see is the typical bull market lasts 54 months with about an average return of 129%. The current one, and this was, I think I finished this one on Sunday, so it might be a little bit off with the percentages, but it's about 160 months old with a return of 395%. So it's been a historic bull market, and it's at what point do the bears get controlled again? I don't know when that is. But that's what's worried me the most.
And how do you think this ties into, Section 6, everything going on geopolitically?
It definitely does. I don't know how much I want to talk about that other than to say I don't know that VIX has priced in the volatility we may see in the winter, especially in Eastern Europe. Between Eastern Europe, gas issues in the US, I don't know that it's priced all of that in. And maybe it's because it's a midterm election year. Because, midterms, we typically see a higher than normal performance in the stock market in midterms, which, cool. But maybe that's just holding everything back for now. I don't know if that makes sense.
I mean, yeah, I was just talking about earlier, like looking at the charts, like you're breaking under, your lows earlier in the year. You're really only one support away from like the pre-COVID crash highs. So, and also now you're breaking out of the VIX triangle at the same time. Like from a technical standpoint, like if all of these macro things were to align, the technicals are saying like sooner rather than later, like you're at that point pretty much. And you can see some of Zeke's charts over here aligning with a lot of things we're talking about. So basically it's one huge storm. And nothing is super clear. There's so many different potential scenarios, but when you put together, a lot of things you talked about in this paper, it is a lot. It definitely is a lot of different things going on. Are there any like main points that we didn't touch on that we forgot to talk about, or you forgot to talk about?
There is one, but I want to do a bit more research about it. It's the Buffett indicator.
Yep.
So it's one of Warren Buffett's favorites. He's kind of backtracked around that a little bit. It's basically going to take the market cap of the entire market, all 31 trillion, I think, last time I checked, and compare that to the GDP. And there's a ratio. Right now, we're just 2.44 times the market cap to GDP. According to Seeking Alpha, it's striking in historical context. I don't know if that's true. I want to actually do a little bit more research on this one. But what you can get out of this is how speculative is the market. If you take this back and you run regression on it to 1929, right before the crash, how speculative was the market then? And that's honestly, that might be another 10 pages I do, but I'd be curious to see what it does.
Yeah.
And then also, if there's one other thing I wanted to talk about, because this one was actually kind of, it was a part of the reason I held off on writing this sooner. If you go to page 32, so the graph up there is the U.S. strategic oil reserves. And somebody on Twitter, I didn't mention them in here, they were saying like gas prices have shot down. This is a great sign for the economy. Sure, in the short term, but at the end of the day, look at the strategic oil reserves. We're multi-decade lows right now. And then there's like that offhanded joke. When the U.S. government needs to start filling those up again, which will probably be soon, who wins? You and your minivan, or Uncle Sam in the tank and fighter jet? I mean, gas prices probably go parabolic at that point. It might not happen. The U.S. might have a way around it.
Yeah, I mean, there's a lot of people, I'm sure, anticipating a lot of this stuff, but especially when you have so many like tensions around the world with everything, you never know. Like anything can change at any moment.
Yeah.
It's
weird. And if anybody reads it and you have questions, feel free to shoot me a question or something. I'm a little bit better when I have time to think about it. And I'll try to write you a actual response.
Yeah, but I know I kind of like put you on the spot with everything, and like honestly, if I was in your shoes, I would not be able to like because after like you just did all of this, like I would be so overwhelmed with everything. I would just want to like talk about everything at the same time. I'd be going crazy. But I think you did a great job. Of kind of talking about like a lot of the main points, but there's a lot more here that we didn't even talk about, everybody. But I just want to, have Levi give all of you like a good intro and explanation of a lot of, the reasoning behind all of this. And I'm sure like while he was talking, a lot of you could have read a lot of the paragraphs and everything. Did you share this already in the fundamental chat in the Discord?
Yeah, it's in fundamentals or fundamental trades.
To that. Scrolling up looking for it. All right, so I'm going to pin it right now. So for anybody who wants to read this, how many pages? It's 37 pages worth of analysis from Levi. Also, shout out to Zeke for helping out here. You can see their Twitter and Discords right over here in the top left if you want to go check out more of their stuff. Let me pull this Discord over. All right, I'll do that after. Let's see. All right, let's do that.
I will say this too. Thank you, Zeke, because without you, I probably wouldn't have thought to do this. And this helped me at least get my thoughts down on paper.
Yeah, huge shout out to Zeke. And to you as well. Thank you very much, Levi. Everybody in the chat, drop some vibes in for Levi for not only sharing all this live on the stream, but for writing this whole entire 37 pages, I think we said it was. This is all for all of you. It's a lot of work you put into this, I can tell. I think you did a really, really good job. So vibes from me, vibes from everybody else. Thank you very much. For anybody who wants to read it, the Discord link is in the description, discord.gg/retrading movement. Head over to the Fundamental Trades channel. I just pinned it in this channel. You can download it and read all of it for yourself. I'm not gonna lie, I even told you this. Like, I'm not a big reader. I'm not a huge fan of reading. I saw it was, almost 40 pages and like, wow, let me set away some time, really sit down and read this. And then I started reading it and I just was able to really get it like, very quickly. The formatting was really good. You did a great job of explaining everything. So remember all the disclaimers we talked about earlier. This is all, opinions, not financial advice, but I think there's a lot you all can learn from this. So go check it out whenever you want. And of course, go send Levi a message on what you think. And yeah, thank you so much for everything you're doing for the streams. I really do appreciate it. And for the Discord as well, the whole entire community. I look forward to having you on again very soon. And yeah, man, have a good night.
Thanks. Y'all too.
Bye. All right. So there we go, everybody. Hopefully you enjoyed that segment. And again, you can go look at all of that for yourself whenever you want. But yeah, it was a pretty eventful stream. Thank you all for all the support. Hopefully you learned something. Make sure the like button, hit the subscribe button. Futures are green right now. We'll see how they look tomorrow. We have FOMC tomorrow. Just a quick look at this week. We have bank earnings on Friday. You can't see it because it's cut out with the overlay, but Morgan Stanley, JP Morgan, Citibank, Wells Fargo, huge earnings all this Friday. Then tomorrow we have PPI at 8:30 a.m. and then Fed meeting minutes from the September meeting at 2 p.m. ET. CPI Thursday, major tech earnings next week. So many different things going on. Also, I'm announcing this. I haven't even shared this in the Discord or on Twitter yet. I'm announcing this on the stream. The market's tough right now. The market is tough right now. I know it is. I feel it too, So I'm going to be doing an extended sale. Usually most of the sales I do in premium are like 2-3 days. For the rest of the month, premium's 10% off. So if you want to join, 10% off for the rest of the month. And that's not only for monthly, which would be 10% off your first month. It's also for your whole entire first year. If you choose to do annual, I think annual is already like 30% cheaper or something. And then you get 10% off of that on top of that. So I haven't even really done the math on that, but it's a pretty nice deal if you ask me. I might be biased, but yeah, for the rest of the month, use code October 2022 at checkout. So the sign up link is the pinned chat. It's also in the description. When you go to checkout, click add coupon October 2022. These are the last. It's not even really here. Let's see if I could find it. These are like the last, like, I don't know, 5 trades or something. The last 2 trades were both like multi-baggers, which was nice. There we go. So this is like kind of how it was going for a while, and then there's like a 300% and a 250% under it. So, you know, it's not easy for me to alert swings in this environment, so kind of been focusing on options. Safe to say they've gone pretty well lately. Can't promise the same exact returns forever, but I'm trying my best. We got a weekly watch list, which is now both bullish and bearish tickers because we're in a bear market. There still are the swings, to be completely honest. The recent round of them is not doing too good, but we did have some nice ones in that rally we had like a month ago or whatever. Bullseye bot. We just did a workshop the other week. I want to do more of those as well. And of course the chat where I'm sharing my thoughts on the market and so many others as well all the time. So all that, and you get all this for 10% off for the whole entire month. If you want to, if you have to, you know, if you're waiting for your paycheck next week or something, you have time. I know I rushed a lot of the sales. This one you have time, so you can plan it out. 10% off both monthly and annual. If you want to sign up as a first-time member. Also, anybody who's not all grandfathered members, because you already have lower prices, but if you just sign up like pretty much this year and you're under the annual premium 2022 or monthly premium 2022, basically you would have gotten an email already. I did email like I think 20 or 30 something members who signed up recently that I also am making this code available to you as well because you kind of just signed up. So I want to kind of also extend that coupon to you as well because you're kind of in the new plan that's not grandfathered. So check your email if you did sign up, like probably since like March or April, I think is when the price is raised. You might have that coupon code available to you as well. And I sent you an email giving you instructions on how to use that for your next renewal. But yeah, you're going to hear me talk more about this throughout the rest of the month. Just wanted to announce it here first. Hopefully that helps out somebody who's been looking for a new place to get education in this crazy time. And I say it all the time, but really, if you can learn right now, when we're back in an easier market, which is almost any market except this one, you will make so much money if you spend time learning and actually being persistent during the hard times. The easy times will be money coming down from the sky for you if you put the work in right now. And this is when most people want to run away and not put the work in and just forget about things. And then they're just going to come back when things are easy. And yeah, they might make some money like they did in 2020 and 2021, but they will only make a sliver what they could have made if they spent time learning. I think this is really right now the time to be learning, being patient, and all that stuff. So this is a great place for you to do that. And if you don't want to, that is completely fine. Free course in the description. There's the whole entire Discord, the streams, however you want to help yourself. That's what I want you to do. Thank you for watching the stream. I will see you all very soon. Have a good night. Vibes in the chat. Hit the like button, hit the subscribe button, and peace out.
I know you like the red one, so I ordered you the best one. It's been a hell of a day, maybe let's just have fun, have fun. You always take your time, 'cause I'm the last in line, sitting here alone, staring at my phone. When you don't show up, I know I'm out of luck, back to work again. I hope to see you then. What the hell of a day, I've been trying to make it work 9 to 5, I'm just here thinking of you. At the end of the day, I've been lying to myself 'cause I'm waiting at a table for two. They're telling me we're so wrong, 'cause I've been waiting for you too long. But I know there's a way, and I'm counting up the days till I find you. Only you. But my life is passing by and I've got no clue. What the hell of a day, I've been trying to make it work 9 to 5, I'm just here thinking of you. At the end of the day, be strong.